James Harnsberger for the inaugural presentation that we're going to have on our channel. I appreciate you guys all being here. The name of the show is called What Just Happened in Real Estate. We're going to cover a lot of cool stuff, a lot of stuff that's happening in real time in real estate, agents, brokers, investors, and anything you can imagine, and everything around that. So, James, thanks for being here. This is going to be a great show, I think, for people.
Oh, we're gonna have a lot of fun. This is
Oh
great.
my God. Yeah, it's gonna be so cool. So I'm just gonna kind of turn over to you. We got a few topics I know you and I talked about earlier. So let's just get started and hit the ground running.
I think part of what makes this exciting is that, I've been in this tax gig thing for 40 years now, and I came into it from the real estate background, real estate industry, highly successful back in the day doing multifamily, 2 to 4, maybe 2 to 6 units.
Hmm.
This was during the time when interest rates were 19.6, 19.7 prime,
Ouch.
and nobody could sell anything. And I had uh, a targeted area to go after people that owned these 2 to 6 units that were free and clear, didn't have any debt. Using the investment tax credits at the time, we could get the owner to sell a 4 unit building with 10% down and 12% interest, 5 years interest only, and take advantage of the tax credits on the ITC tax side of it, not have to pay any taxes on it, make all of that money on an installment sale, take that note that he had, and then use that to hypothecate the note and buy another 6 unit for himself. And I mean, I made an insane amount of money back in the day doing that.
That's
And
awesome.
the opportunities that I see today are even greater than I saw then.
Yeah, you just triggered something too. So as you know, I was a loan officer for quite a few years, about 10, 15 years ago. And we used to have those old rate sheets on the wall from 82, 83,
Oh yeah,
84, 14, 16, 18%. And at the time I was writing loans for 4%, 3 and 3/4.
right.
And I'm just like, that's crazy to me. Yeah.
How did people do it?
Right.
They made it work. They
They
made
made it
it
work.
work.
Well, look, I
So
mean,
I think just in terms of what we're looking at right now, the opportunities that I see in the next 6 or 7 years, by the end of the decade, certainly,
yeah,
we're going to have a very different real estate market, real estate industry.
right.
We'll talk about a couple of things that are on the topics list today of what just happened in real estate. One of the things that we'll talk about a little bit, not right now, but I want to make sure we don't miss it, and that's this thing that Bezos is doing.
Right.
Because we're gonna put, I don't know, we'll probably put 20 or 30 grand in that just to test drive it and see how it works. But more importantly, I think now what we're looking at is, how is the industry shaping up for 2024, 2025? And you really have to have that view. We get such tunnel vision into the here and now, and that's not how real estate works, and that's not how it's working now. Whatever's happening right now, you've got to have a view of 6, 12, 18, 24 months in the future,
Right.
because otherwise what's going to happen is you're not going to have a pipeline of opportunity. It's going to dry up and you're not going to be able to pivot. And
Right.
with the things that are changing, fractional ownership, fractional investing, digital economy, all of these things are going to be driving directly or indirectly the influences on the real estate industry. And so not only was I in the industry as an agent, but my wife and I, both independently, and then when we got married about close to now 20 years ago, we have both built a successful history of investing and developing real estate. And so, we have pretty close to right at about an 8-figure portfolio right now. And that's growing at a rate of about 17% a year.
Right.
And when you look at value and income growing at a rate of 17 to 20% a year, you're going to double about every 3.5 years that value. And that's possible anywhere right now. But how you go into the real estate and what your objectives are. I think that's what this show is really going to be able to help people sort out, particularly if you're a broker, an agent, or an investor. What just happened in real estate this week? We've got a lot of stuff that really shook out because we're in the first week of the market for the new year, and we're already starting to see the money lining up. We're already seeing the investors and the institutions and the markets starting to line up for some big shifts and changes. If you can stay on top of these things and see how they affect you and how they affect your clients and how they affect you as an investor, you're gonna be able to play the game and win every day. And that's another reason why I think that this show is so awesome, and the timing's just perfect. So that's my little background in terms of what prompted the show. And I just invite everybody that you can share the link, like it, hit the, subscribe, and just get as many people out there to watch these segments, because this is going to move the needle for everybody that can take it and can apply it. And I think that's probably the second biggest reason, because this stuff is practical. How does it relate to what you're doing, and how do you apply it? So that's my little background.
100%. No, well said. So one of the things you and I were talking about earlier, and I like to kind of get your take on this, is you and I were discussing departing from a transactional model and moving towards a consultative model. So why don't, if it's cool with you, let's kind of start there with regard to agents and brokers and all that stuff. How do you see that going?
That's changing. And
Yeah.
we're in the middle of that change right now. I think that change really started at the end of 2009, right after the crash.
Sure.
We had a lot of reset in the economy, but the industry really took a gut punch, and we were on a very dangerous financial cliff, as everybody knows.
Sure.
And I think coming out of that, we got to about 2012, 2014, right before the introduction of Bitcoin, and it really started reshaping how real estate was going to grow.
Yeah.
Part of what was the driver, and this is what a lot of things that people just don't pay attention to, and I've been tracking for 20 years. The boomer population is sitting on about $110 trillion of wealth.
Wow.
60% of that is tied up in real estate. Okay. Now, when you start looking at boomers turning age 65 at a rate of 11,000 plus a day now for the next 15 years, right? And you start looking at this wealth transfer, part of the challenge in the market right now is boomers are not selling their properties that have 2.5% to 3%. I mean, it's just, we've got a small mortgage left on our beautiful home over here on Mount Helix. It's probably worth, I'm going to say close to $2 million.
Mm-hmm.
We paid $500 for it 8 years ago, right? And I think we owe a little bit more than $300 on, and it's a 3% VA loan, right?
Mm-hmm. Right.
We're not selling this. We're converting this to a rental and buying our forever home over in La Jolla. Right. This will be a rental that'll produce $100,000 a year of income. It's in San Diego, Southern California. Right. So myself and boomers like us are going to do the same thing. And here's the thing. They've got all the cash. Right. So when they go in and buy a piece of property for an investment, they're paying cash.
Yeah.
How are you going to compete with cash?
Right.
You're just not going to do that.
Mm-hmm.
And a good number of boomers are not going to, unfortunately, to the chagrin of the heirs, they're not leaving all of their wealth to their children and grandchildren.
Right.
Okay. And studies are showing more and more of that's going into foundations and, charitable remainder trusts and things like that. My point, if you're an agent in the real estate industry, or if you're a broker in the real estate industry, the transactional model is over. It is a dying dinosaur that just is in its last stages of taking its last breath.
Right.
You can't compete on the commissions, because you can list property and sell property right now for a 1% commission. How are you going to compete with 1%? Zero?
Right.
You're not going to be able to compete on a transactional commission basis. So you don't get into playing that game. what you want to do as an agent or a broker is you want to look at an organizational structure and how you can leverage, because even like stuff like Century 21 and Remax and Berkshire Hathaway and all of these, they're all being forced to change. The market conditions and the shift of the population is forcing them to change because they can't stay competitive.
Right.
So you've got a couple of models out there. One that we work very closely with, like Grow Global, I think is a great model. It's an affiliate related type model. But here's the key, and this is the key to success. And I am an expert in real estate from A to Z. And I work with real estate professionals that make 7 figures a year. So I'm not working with people that, I do work with people that are just starting, but my biggest clients in real estate as real estate professionals are making high 6 to 7 figures a year. And the reason that they're doing that is that they've got a consultative model, right, a relational model. They're building a relationship and expanding their knowledge base, their expertise, and the areas that they can help their client, particularly their investment clients. Yeah. It's not enough to understand how the cap rate scores, because frankly, investors don't give a shit. They really, they'll ask you what the cap rate is, but nobody really cares. And nobody really understands functionally its context. Cap rates are contextual. Depending on the area, it's a reflection of risk. And the higher the cap, you look at all of these things and you think, well, why does that matter? It really doesn't matter. It's one of a number of financial indicators. What that investor getting ready to buy that property wants to know is how much is it really going to cost in real tax dollars, pre-tax and post-tax, and what's it really going to make me that I'm going to be able to keep, and how fast am I going to be able to accumulate and grow that wealth? Right. And that's a couple of ways that you look at that, the appreciation value, the income, the growth of the income, the equity, all of these things contribute. Here's the biggest mistake that every investor and every real estate professional makes. If you don't do the modeling on an investment property, it's a crapshoot. You might as well just go to Vegas and put 20 grand on red, right, on lead, or 50 grand on black, sure, because you're taking a crapshoot. So if you're a real estate professional, whether you're an agent or a broker, 2 things I would advise. Get with an organization so you can be a spoke in a bigger wheel that has a finger on the pulse of the future. Right. And like I said, there's a couple of models that I've looked at. We're working with one of them right now in the stuff that we're doing with those folks over at Grow Global. Those are the things that are going to change and shape the future. Yeah. Second is bring greater value to your client, right? You've got to bring greater value. I have clients that are real estate professionals that their clients will actually pay 7, 8, even 9% in the commission on a deal because of the translation and transmutation of that value that they're bringing. They're modeling that property. We're doing an engineering study for cost segregation and asset allocation. We're doing the income analysis. We're doing a deep dive on a rent survey, not a rent comp. We're doing an actual rent survey by the square foot. So these are value points that agent is being able to act as a consultant. He or she and that client are getting together, and it's no longer just about buying the property for the cap rate or buying the property for the income. How do you buy the property for the income and don't pay any tax for the next 5 to 10 years? Bingo. And a model that does that, right? Yeah, right. And so I'm just going to caution that, and that's another reason for this show. We want to help those agents that want to grow with the future, right, and those brokers. We want to help them really get into that lane that will transform it from a transactional model. Yes. 1%, 2%, 3%. Nobody really cares. what the commission is. At the end of the day, if you've got the value and you can show a client with the financial attributes and the tax attributes, you can show a client how the IRS will pay for that property in 5 years or 70% of that property with proper modeling. You've got a client for life because they're going to be able to buy more faster. So why wouldn't you be a good consultant? You don't have to be a property manager, but you can certainly be a consultant and help them get a property manager if they need one. And they'll pay you for that. You know, this is the thing that people just don't understand. You've got to expand your knowledge base. You've got to know and offer more, bring more value than you expect in fee, and you'll have them lining up to be your client all day long.
No, and I know that to be true because I've watched it just working with you and working. That's what's so cool about all this stuff is you don't have to predict much of anything really. When you sit down and you use the spreadsheets, the proprietary spreadsheets and the pro formas that you've built over 40 plus years. I've watched you sit down with people and run through the numbers. And one of the things I'm fond of saying is numbers are not emotional, right? It's just data. You feed this stuff into the data form. It says yes or no at the end, basically, to make it short. And then you do the deal. Like it's that simple. And you can have, I mean, I don't know what your prediction is, but I think if you model correctly, you probably have a 99%, if not 100% chance of it being successful.
Well, let me put it this way. You let the data do the talking and let the data tell the story. Basically, shut up and let the data do the storytelling, right?
Right.
Set it and frame it, obviously build the relationship, obviously.
Sure.
But let the data, and I'm going to tell you, my beautiful bride and I, we've not, in our whole history, we've never lost money in real estate. In our most recent deal, we made 108% profit, roughly about $670,000, and not a dime of it was taxable. Not a dime.
Right.
Okay. And when we do one of the shows, I'm going to take everybody through because we're putting all the numbers together. We just closed that escrow just not too long ago.
Yeah.
And all cash for $1,250,000. And of course, we didn't have any debt or anything like that. And we more than doubled our money in our investment. And how did we get to, because we set up a plan when we bought it so that when we were at the point where we knew where we were going to sell it, we had a tax plan and a financial plan.
Right.
And that money's sitting in the market right now, making us about 6% a month.
Well, and that also brings up a point that I just wonder how many agents, brokers, investors are missing that second part of the pie, that piece of the pie.
95%.
Yeah, and structuring everything the right way. So when you do make a move, your tax exposure is as close to zero as you can get legally,
Zero.
obviously.
Legally, right.
Yeah.
You're absolutely right.
Yeah. So I just wonder how many people out there and whoever's watching this do a self-assessment. Are you set up correctly? Are you making these moves with the end result being the minimum amount of taxes you legally have to pay?
And here's the other thing. It's like you're buying a property for what is the purpose that you're investing in the property? In other words, what are your financial and investment goals and objectives?
Yeah, right.
Are you buying it to produce income?
Mm-hmm.
Are you buying it for future appreciated value and gain? Are you buying it to add to your portfolio so that it can give you income in your retirement years? Mm-hmm. What are your financial objectives? Right. Does the property meet those financial objectives? And then people get hung up on, I don't like the kitchen and it's this yellow paint and there's a little bit of repair and it's like, are you serious? Look, when we bought that last deal, we were the third lowest offer.
Mm-hmm. I remember
there were two offers that were higher than ours, and they took our offer. Now, how in the hell were we able to offer less?
Right.
One of them was 30 grand higher than us, and the highest one was 50 grand higher than us.
Yep.
And we were lower, the third lowest, and they took our deal.
Mm-hmm.
Look, if you want to know how to write an offer and how to model a property and get the seller to sell you that property, attend these shows, what just happened in real estate. And I'll walk you through how we did that. And we've done that a lot. Okay. Here's the key.
Yep.
Know your property and know your objective. Because if you don't have that nailed down for your client, you're going to waste a lot of very valuable time. And time is a commodity that is a valuable resource. Right. You don't have a lot of time to be wasting chasing, whatever the hell we're chasing.
Sure.
And not working on actually moving the deal or moving the needle to make the deal close.
Yeah, no, for sure. And I can't wait till we do that scenario based show that we'll do on that particular property, just because I know the answer. I know sort of how the sausage is made there. And it's very fascinating. I think people are going to dig it because I don't know how often that happens where you're the third lowest, but and you get the property anyway, but you're going to lay all that out and it's going to be beautiful. So
yeah, no, it was awesome. It was awesome. And, and my wife's a real estate broker. She keeps her license active. She doesn't work with clients anymore. She's sort of retired. We get, she does consulting deals once in a while where she'll share in a commission with another broker, another agent. Right. But let me just point out that, the whole thing about how you put a deal together, you've got to start from the end and kind of work your way back.
Right.
And I think everybody goes about, it's like this. You've bought real estate, so they've got it listed for, let's say, 350 or 400,000 or whatever it's listed for, right?
Right.
And then you come in and then you say, well, should I offer a little bit less? Mm-hmm. If the market conditions are tight enough, then you're going to be competing with other people.
Right.
How do you set yourself apart where you're not competing with other people? There's a knack to doing that, right? So what my point is if you understand your client, and you can help your client understand what their financial objective really is and nail that down.
Right.
Then modeling that for the financial attributes and the tax attributes, that's the easy part. That's what I mean by letting the data tell the story.
Right.
And so it was just a compelling offer that we wrote, and we showed them something that nobody else could show them. And we actually use a buyer broker agent. Mm-hmm. Every deal that we buy, we actually pay somebody a commission. Yeah. We pay a 6% commission. Right. Because we want them doing all that damn paperwork. Right. And we don't mind that. It's built into our deal. But my point is, the sellers, we knew what the situation was, and we had our agent let our agent tell the sellers who we were as people and as investors and what we were doing. Right. And you really got to understand that, it's a relationship and it's also an emotion. Yeah. And if you can understand that you can meet somebody's need, the seller, and what they actually need and desire in the deal by taking a little time and getting to know the situation.
Yeah.
And do a little bit of modeling and help them get what they want sooner rather than later, you can do the same thing and buy property cheaper than what it's listed for or other competing offers. And it's not the first time we've done that. We've done that on every deal we've done.
Yeah. Yeah. And you bring up a good point, which is, and this is my personal belief on all this stuff, whether it's taxes or real estate, a little bit of education goes a very long way.
Absolutely.
And you don't know what you don't know till you get around people like yourself who do know what they're doing. No, that's great. And I agree with you.
I've been this rock for over 40 years as a professional. Yeah. Isn't that like my first rodeo? I mean, I was just talking to one of our attorneys in a meeting yesterday. And I just had it because he's representing us in another deal that we're doing. And out of just the blue, a couple of the attorneys were there. I just said, let me ask you a question, Kevin. I said, how old are you? 41. I said, do you realize that you're a great tax attorney, a great litigator, You were 1 year old when I got into the tax business. You were 1 year old when I got into the tax business. You
Right.
were, and now you're 41.
Right.
So I appreciate your legal advice, but I've been doing this shit for a little bit longer
Right.
than you have been alive. And I
Yes.
think I got it down because I think I know what the IRS is going to do. They're going to
That's right.
tell you politely to go screw yourself.
Mm-hmm.
So quit wasting time.
Well, and that's another great point too, which is street smarts versus book smarts, right? I'm sure these attorneys are well schooled. They
Very
have to be,
smart. Very
but
smart.
but you can't put a price on 40 years on the street dealing with the IRS, structuring deals.
Getting punched in the face on
That's
every
right.
deal,
Right. And
right?
then, but at the end of the day, now you can see around corners a lot more than the rest of us can, right?
That's right. I'm
Yeah.
not as good looking and I don't have as much hair as I did back in the day,
Right.
but who gives a shit? I mean, I've been around the block a while,
Right.
and it's that knowledge and that wisdom and that experience that can save you a shitload of money and time. That's what another part of what drove me to want to do this show is that, look, cut to the chase and let me show you how to make short hay of this
Right.
and be much more effective. Don't Who gives a shit what people think? I mean, who cares? You're not out there to win a popularity. You're out there to help
That's
a
right.
client. You're out there to make money.
That's right.
Let's do that.
Let's get excited by that. Yeah, for
Yeah, all
sure.
this other shit is just noise.
So speaking of looking around corners, let's shift gears again. I want to pick your brain on. I was going through an article today, and I'm going to put some of these articles below the video for everybody.
Oh, cool.
Um,
Awesome.
yeah. So they'll be able to kind of see what we're talking about. What are your kind of loose predictions for 2024 going forward? And we've got election year, we got rate cuts possibly, we got all kinds of stuff
Great
going on.
question.
Yeah, just kind of like just run wild with that for a few minutes and
Yeah, great question. So, a couple of things. We're
yeah,
going to continue to see contraction in the supply curve,
gotcha.
right? We do not have enough inventory. We have less than 70 days of inventory, I believe, the last time I
Wow.
checked last week. We do not have enough inventory. And in multifamily, the 2 to 12 or 2 to 20 units,
Yeah.
we even have less inventory. And that's a big soft spot. That 2 units to 20 unit range,
Hmm.
right? After you get past 5 units, it's really kind of commercial. So it's kind of two parts.
Sure.
But that whole market space is really tight. There's a real tight, narrow band in that right now, everywhere in the country. Uh,
Hmm.
and a lot of what's driving that is we have a lot of displacement. We have a lot of people from Illinois, from Jersey, from New York, and California, these socialist woke ridden states. Um, and people are moving by the millions. They're
Yep.
leaving and they're going to these other states,
Hmm.
Kentucky, Tennessee, Florida, Texas. Money goes, capital goes where it's going to be treated friendly.
That's right.
It's not California, right? And it's not Illinois, and it's not New York, and it's not Jersey, and a few other states.
Sure.
So I think we're going to have continued contraction with growing demand. I believe the Fed has hinted that we're going to have 3 rate cuts. The market has already priced in 6.
Wow.
Here's what I think. I think by December of 2024, we'll close the year right around 4.75 to maybe 5.
Wow. Okay.
Okay,
Yep.
on prime. And I think a lot of that's going to drive or be driven because we're in an election year. And this is going to be kind of a weird election year. Not that the last one wasn't weird or the one before that, or Clinton v. Gore. That was crazy. But it is an election year.
Yeah.
And you go back historically and you look at the dialing of the dollars and you see these influence, these factors do have something to play. But here's the thing that I think is going to drive a lot of this, that is the unknown.
Yeah.
And the unknown is going to give us opportunity. There is a huge amount of money that's already started coming from the boomers taking their retirement money and doing self-directed and looking at downsizing and converting. That's a very big area right now that's growing a lot of momentum.
Hmm.
I think people are underestimating the trend analysis for population and demographic trend shifts that are really going to drive. In fact, I think I've got that book here. Hold on. I have bought about 20 copies of this book and sent it to people. This is a Bible. This is Upside. This is a Bible. You've got to know these population demographic trends, millennials, Gen Z, Gen X, boomers. You really have to know that's what's driving everything in the economy, right? So I think we're going to have some unexpected to the upside surprises. I think prices here in California, that 2 to 20 units, I think we're going to see continued appreciated value, 12 to 18%.
Wow.
I think rents are going to continue to grow nationally, 8 to 12%.
Mm-hmm.
I think with the exception of a few pockets in a few areas, price appreciation on single family and new housing, I think we're going to see 8 to 12% continued appreciation in value. Where we're going to have a challenge is how do you get the displacement factor of the equilibrium of the market balanced back? And I think one of the things that we're seeing right now that's going to lead to that is Fannie Mae just changed the loan requirements for 2 to 4 unit multifamily owner occupied. You no longer have to come in with 25, 30% down, 5% down, and you're
Wow.
done.
Crazy.
And you're going to see some real shifts now. The third thing, and this is the hidden unknown that nobody's been paying attention to. The ETF that's going to happen next week when the SEC approves an ETF for Bitcoin is going to drive $50 to $100 billion into Bitcoin before the end of the year.
Wow.
The price of Bitcoin is going to go parabolic.
Yep.
How does that relate to real estate? It relates to real estate because when you can take institutions that are taking retirement money or your retirement money from your real estate transaction, and you can start putting it into an ETF in Bitcoin,
right,
you're going to have an opportunity for that. And it's going to influence the REITs, the REITs, and those price influences. Right. So don't underestimate the power of an ETF in Bitcoin, plus the halving event, which will be April 23rd.
Yep.
When the next halving event happens, it's going to have an influence indirectly in driving the price volatility of the market price in real estate.
Gotcha. Oof, yeah, it's gonna be a wild ride, 2020.
And I haven't missed it since 2015. I've been spot on almost every year since 2015.
So when we talk about the contraction and we talk about stock being low, but then also rates being cut, it seems like there's going to be a lot of chaos. And maybe I'm wrong, but if this is going to drive prices up, I would think like a lot probably, yeah. Because if the stock goes down and you're just going to have an influx of people who are like want to jump on a house.
Well, you're seeing a growth because you're going to see digital currency being used in real estate, right?
Yeah.
And when we get to that thing about what Bezos is doing, fractional ownership, you can invest in real estate right now in rental property, and you don't have to be a landlord and worry about the landlord for as little as $100. Are you serious?
Oh yeah.
Get a 9 to 12% return, right?
Yeah, no, it's great. Well, you started talking about. Let's talk about it. Like, what's the real specifics on that program? Because we were talking about it a little bit before the show here, and I'm kind of excited about it. I'm probably gonna invest as well. So
you can get into the deal that he's got, and we'll put a link on the thing on the YouTube
for sure.
For as little as $100 and own a fractional part of a rental property, and actually see the address and see the property of where it's at, and I think we're going to take 25 or 30 grand probably next week and just test drive it for a little bit and see how it works.
Okay.
But I can tell you the investment platform as a platform, when you're buying shares through that deal, is completely backed by Jeff Bezos.
Right.
And it's well thought out. The little bit that I read today, and I'll read a lot more over the next couple of days, I'm going to do a deep dive on it. But it's a unique opportunity, and you're going to see a lot of copycats.
Yes.
You're going to see a lot of fractional ownership, which is going to continue to push demand, particularly in ADUs, the accessory dwelling units, or what we used to call granny flats.
Right.
I think we're going to have disruption to the downside in Airbnb. And think about this.
Yeah.
You know, you have a bit of an oversaturation of too much supply and not enough demand,
yeah,
or growing demand because of the migration in certain areas of the country, with all the crime and all of that. So, there's some other forces at play there. But if you have a single family house and you have a vacancy for 1 month, you have 100% vacancy for that month.
Right.
Right.
Yep.
SFRs are not financially, and especially for tax, they are not good vehicles. Single family residences are not good vehicles for rental properties.
Right.
Now you can make it work, but generally it's cash intensive. In other words, you've got to have very low or no mortgage debt, right, and you've got to have that capital working. So if you're buying a house somewhere, not here in Southern California, but let's just say somewhere around the country for 250, 300 grand, how much could you get on that 250 or 300 grand leveraged up in a 5-unit building, as opposed to dumping it in a single family with no debt?
Right.
You've got to understand what your financial objectives are, which is what I was saying earlier. So I see what Bezos is doing as something that, and it's well thought out. So they didn't just come up with this like Saturday, right? This has been well thought out. You can get in for as little as $100, and the yield, it looks like most of those properties are averaging between 8.75 and 12%.
Wow. That's amazing. Yeah, no,
it's crazy. It's amazing. And there's going to be more of it.
Yeah, no, and it'll be, when you talked about the copycats, it'll be interesting to see who else puts out similar models, right? So
you're going to have a whole variety of fractional ownership.
Yeah.
We were working on a deal with 10 clients 10 friends that got together, and they wanted to buy this 5-unit building.
Right.
So how do you structure that deal so that they all have 1/10 of an interest in that deal? So, and we're still kind of working through some of the details, but basically we're going to have a collective management corporation that they're all going to be shareholders of.
Right.
And each of them will have their respective investment vehicle that will then go into a final vehicle that will actually buy the 5 or 6 unit property, and they'll probably all put enough cash in to pay cash for the property with no debt, because they want the cash flow and the appreciated value. Okay. Sure. So you're going to see a lot more of fractional ownership, even in single family. Okay. And multifamily. And that is going to change the dynamic, because people are thinking now, practically, particularly the younger generation, maybe the way to a house in real estate is I do a couple of transactions and make some money and make some profits, and then take those profits and invest.
Yes.
And wait till the market settles down a little bit.
Right.
The market's not going to settle down. It's going to continue to settle up.
Right.
By that I mean the valuations and the prices and the appreciation value is not going to go down. There are a few areas in the country that there will be an exception to that. Yeah. But for the most part, we're going to continue to see increased appreciated value.
Got it. Interesting.
So I think Bezos has hit a home run on that.
So and one of the things, question I wanted to ask you earlier about the Bezos thing, sort of tied into the regions of the United States in particular. So one of the other things I was looking at today was about some of the hottest cities that we can look to in 2024 for growth and best places to live and all that kind of good stuff. Is the Bezos model, or any model really, going to be dependent on what part of the United States, because from what I saw in some of the articles, again, we'll put this one in the video or below the video, mainly had everything sort of on the East Coast, the eastern part of the United States. So can you kind of speak to that a little bit? Because, you know, people that watch this are going to be obviously spread all over the world, perhaps, but here in
Of
the
course.
U.S., yeah, here in the U.S., I'm assuming some pockets are going to be more advantageous than others.
So two parts. I haven't dived into the Bezos thing enough to know if there is a geographic or
Okay.
regional preference in their investment strategy. But I will spend the next week or two really breaking down and really understanding. And as a valuation analyst myself, I'm going to be very curious and to know sort of how they look at that, because I've got a different way that we've been looking at it
Yep.
for single investors and for real estate agents and brokers that we're working with. The second part, the top 10 cities, I think Zillow does something like that every year.
I believe so. Yep.
Yeah, yeah. Well, recently you can just look at their stock. Zillow hasn't been the darling of Wall Street.
Right.
And
Right.
their predictions in the market have been a little bit suspect in the last couple of years. They've missed the target. So if it was Zillow's hottest housing market for 2024 or top 10 cities like last year, go back to what they put out last year and then look at the market this year.
Right.
I think what they're looking at, and they give you some detail, they look at the migration from the census data of the people moving from here, from this zip code to that zip code, right? That's one indicator. But again, I think that undercuts and underestimates the hidden value that nobody's paying attention to in the population shifts between the boomer groups and the millennial groups. Those two groups, you have to represent or understand that they represent 80% of the economic activity in this country in those two groups.
Right.
Everybody else is breadcrumbs. Okay.
Yep.
I mean, if you're 18 to 24, breadcrumbs.
Right.
If you're 25 to 39, breadcrumbs. If you're 40 or older and you're in those other two groups, you got money or you got a shitload of money.
Right.
Okay. And you got enough money to do a lot of things that everybody else has got breadcrumbs and they're just hoping that they get money.
That's right.
So you're going to see these 10 hottest cities. And how do they measure? Is it just on the economics of closed sale transactions on single family,
Right.
to the exclusion of multifamily, to the exclusion of rent increases?
Yep.
So there's a lot more to the story. And then you don't know, and there's been some speculation that, some of those cities and their mayors and their city councils have been good friends of Zillow financially.
Right.
And there might be some other incentives driving that. I don't know. I just, I just tell you what I hear people talk about. And I think, well, if that's true, that would not be cool, because that would be a little undue.
Yeah. Well,
I'm not saying that that's what it is, but I'm always suspect.
Yes.
I'm going to tell you that there are areas in the middle of the country, the flyover part of the country,
yep,
and and up in Montana and Wyoming, Idaho. There are pockets up there that are really, really churning and burning right now, and people are not paying attention to it. Yeah. And you can go in, what you would pay here in San Diego, what you would pay for, a 3-4 bedroom and 3 bath or 2.5 bath, and a nice sized lot. Maybe that property is 7, 8, 900,000. Mm-hmm. Up in Idaho or any of these other areas, you can get 15, 20 acres and twice as much house for a fraction, $200,000, $300,000, and there are other incentives. So I see some shakeout. I think Florida, I think Texas, I think Tennessee, I think Kentucky, I think Georgia. I think those are going to be a lot hotter than people are even considering right now. They're going to be very, 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 very popular.
Oh, no doubt, no doubt. Yeah, no, it just seems there. It does seem to be a migration sort of that way, and like you hinted at earlier, could be politically, political, could just be sort of economic climate, but it does seem like there's an influx going that way.
Yep.
This is awesome stuff, but it also brings up a good point. Also, these are articles, particularly if they're sponsored, if you can find out if they're sponsored, that's why it's so much easier and better to work with somebody like yourself in particular, because I mean, you're in the business.
Right.
You're not a journalist writing for
Right.
Yahoo or Zillow or whatever, or some blogger that does that. So yeah, so just to let that be a lesson, everybody watching, that these things are fine to give you some basic information, but if you really want to know how things actually work with James.
Yeah, don't
Work
put
with
a
a
lot of weight in it, because
That's
I
right.
work with real estate agents, real estate brokers, investors, first time home buyers. We work with anybody and everybody in real estate.
Yes.
In terms of the firm, I work on a lot of the larger financial
Yep.
deals. And then with ITWS Financial Services, that is exclusive for high end, narrow cast real estate investing and consulting.
Yeah.
But we can actually move the needle a lot when we help an agent really understand how to model a deal before they start.
Right.
Don't get so excited to get a listing that you undercut what the potential value of that deal is, because you're not serving your client, and the client will actually pay you more
Yep.
when you unlock hidden value that they didn't even realize.
That's right. Yeah. No, I mean, even on our ITWS website, we even call it out right on the top of the page. While everybody else is focusing on price, we focus on value,
We focus on value.
and everybody wins. So
Everybody wins. That's right. That's
so
cool.
so James, this has been great, man. Like, is there anything else we want to talk about in this first episode? This
No,
is a
I
lot of
think,
cool stuff.
look, I mean, time just flies by. It's just, I'm so excited that we get to do this. We're
Yes.
going to do one of these a week and maybe even more. I mean, we're not going to have any fixed day. We'll just put them up there.
Yep.
Um, but I think the thing to look at, generally the weekend is a good time because the markets are closed and the dust is settling from the Friday, action, and get to Saturday and Sunday pre-market. We get a chance to go through a lot of articles and kind of pick and choose things.
Sure.
Really want to know what just happened in real estate this week and how does it affect you and how can you leverage and use that.
Yes.
You're going to be the smartest guy or the smartest gal in the room working with your client without having to tell them you're the smartest guy or the smartest gal in the room. Let us and let me give you the context of what that thing that just happened in the news was about and how you can apply and use that the next time you're talking to a client. Again, and we'll have a couple of weeks building a little bit of momentum, and it's news. We just want to get out and get as many people to know about it. But I think what we'd like to do going into maybe February is maybe announce a few of these in advance.
Absolutely.
And let people jump in and throw the hard questions out or the deals. If you've got a deal and you're confused or you're stuck and you don't know how to make a crappy deal turn into a good deal,
Yep.
I think if we can get to the point where we can open this up to a live setting and let people jump in and put your comments down below on the video and just let us know. I think that would be totally awesome. That would be the next best thing that I would hope that we could do with the show.
Yeah, no, I mean, you and I have talked about our future episodes, and we're gonna blow people's minds. We're gonna give them tools. They're gonna be so much more powerful when they meet with
Oh, that's
clients.
gonna be awesome. Yeah.
Oh, and once they get one or two under their belt with this new information, boy, they're gonna close more, find more deals, and they're gonna go smoothly, and they're gonna make more money ultimately because they're gonna be set up. They're gonna be set up correctly. The taxes are gonna be in line, and it's just gonna be a win-win for everybody.
Yeah.
So,
No, that's awesome.
yeah, this is great. So we'll end it here, and everybody remember to like and subscribe, hit the notification bell. That way you know when stuff comes out, and our info is below if you need us. So thanks, James.
Now you know what happened this week in real estate.
That's right.
What just happened in real estate. Now you know. All right. Awesome. Take care. Cheers.
Thanks, James. See ya.
All right. You bet.